Okay, so like imagine a company gets a second chance to go public, you know? It's kind of like what's happening with Hexaware Technologies.
Hmm, interesting.
Yeah. They were delisted a while back. 2020, I think, basically went private. But now they're, hoping to make a comeback, a brand new IPO and all that. Makes you wonder, is this like a golden ticket for investors or a big old red flag? That's what we're going to unpack today.
It's definitely not your typical situation. Delisting, then relisting after, what, just a few years?
Yeah,
Yeah, it raises some questions for sure.
for sure. So, we're basing this whole deep dive on this IPO analysis, right? It's from all things infotech. And their big focus is, is this IPO worth your money? And we're not talking small potatoes here. This is on track to be the biggest IPO ever from an Indian IT company, like ever. A whopping R's, 8,750 crores.
Yeah, that's a lot of crores. But size isn't everything, right? The analysis actually digs into some pretty interesting stuff like Hexaware is all about AI. They say it's at their core, but their profit margins have been shrinking. And then there's the whole delisting after private equity buyout and then getting resold. It's kind of like a financial hot potato, you know?
Right. Adds a whole other layer to it. So before we get into the weeds, let's just sketch out what Hexaware actually does. They're in like 6 different industry segments, everything from, the usual financial services and healthcare, but also travel and transportation. Basically, they use all this tech, especially AI, to help companies with, well, digital transformation.
Right, right.
It's like, imagine them as the tech wizards, helping businesses go all modern and streamlined. Like, think about how Uber used technology to change the whole taxi game, right? It's kind of like that.
Yeah, I see what you mean. Good analogy, but you hit the nail on the head.
Yeah.
Digital transformation, AI, everyone's throwing those buzzwords around. The question is, does Hexaware actually have something unique, or is it just marketing hype?
Exactly. All right, let's get into the nuts and bolts of this IPO, shall we? So it's called an offer for sale, meaning basically the current shareholders, and in this case, it's mostly Carlyle. They own the majority. They're cashing out. The offer, let me check my notes, opens February 12th, runs through the 14th, price band of 708 per share.
Hmm. Offer for sale. That always makes potential investors, like yourself, think, why are the current folks so eager to sell? Not always a bad sign, but definitely something to consider, their motivation.
Totally. Okay, rewind with me for a sec. Back to 2020. Hexaware gets delisted. Bearing Private Equity Asia, they buy out all the public shareholders. Share price jumps up, and it's actually, get this, the first successful delisting in India in a good while. Then, just a year later, boom, 2021, Carlyle swoops in, buys Hexaware for a cool $3 billion. So we've got this, like, private equity shuffle happening really fast.
Yeah, that's what's so interesting here, that back and forth from private equity to the public market. Why would a firm like Carlyle, they're no slouches, delist a company just to bring it public again so soon?
Yeah.
What's the strategy? Anyone looking at this IPO, that's where you gotta analyze Carlyle's motives.
It's a head scratcher. And here's where it gets kind of concerning for potential investors, right? So their EBITDA margin, basically, think of it like the pure profit they're making. That's actually been going down since they went private.
Yeah.
Now, that's weird because you'd think a PE firm like Carlyle, they're known for like streamlining things, boosting efficiency. You'd expect those numbers to go up, not down, right?
Right. Yeah, it makes you wonder. That declining profitability, it's a red flag. Are there internal problems at Hexaware? Maybe they're not capitalizing on the growth that's happening in IT. Maybe there are issues with their whole approach, how they operate. Investors got to think about that carefully.
For sure. So to give some context, the analysis compares Hexaware to like its rivals. Companies like Persistent Systems, Coforge, LTI Mindtree, Emphasis, like sizing them up against the competition.
It's like, yeah, comparing apples to apples, right? Especially in IT, things move so fast, you got to see where a company stacks up against the others. How are they doing on those key metrics that tell you if they're going to succeed or struggle?
Exactly. Okay, so some interesting findings from this comparison. Geographically, Hexaware doesn't depend too much on like the Americas for revenue, which is good. But a competitor like Coforge, they're even more diversified. Then there's onshore versus offshore revenue. Offshore usually means lower costs. Hexaware has a smaller chunk of its revenue coming from those cheaper offshore resources. And, compared to someone like Persistent, that hits their profitability.
It all makes a difference, These metrics, they directly impact a company's growth potential and, well, let's be honest, the profits. Investors, they're always looking for companies that can, operate smoothly, use those cost advantages to their benefit.
Right. But it's not all bad news for Hexaware. They're actually doing better than their peers at like keeping their employees happy. Lowest attrition rate, which means employees are sticking around. And in an industry where talent is like gold. That's a big deal.
Oh, absolutely. Low attrition, it tells you something about the work environment, right? Could mean a more stable, skilled workforce.
Mhm.
That can translate to, better performance, better services for their clients. Good news for investors.
Okay, now here's something that really jumps out from the analysis. Since 2019, they've only made two, and they were small acquisitions. For an IT company, especially one looking to grow, that's not normal. It's like they're holding back from what everyone else is doing.
Yeah, that's a bit of a red flag. Mergers and acquisitions, that's how IT companies usually expand, get into new markets, bring in new talent, new tech. So why isn't Hexaware playing that game?
That's the million-dollar question, right? Could be they're missing out on growth or maybe struggling to keep up with all the new tech coming out. This is where you really need the management team to be more open, explain what they're thinking.
Couldn't agree more. Investors need to understand the management's vision, their strategy. Are they being cautious, strategic, or are they just, missing the boat? That's what we need to figure out.
So it's like we've got this picture of Hexaware, right? Decent track record, but they've made some interesting choices along the way. This IPO, it's priced kind of right in the middle of the pack, PE ratio of 41. Their less successful competitors, they're trading around 35 times earnings, but the ones doing really well are closer to 65.
Yeah, that PE ratio, it's like a quick glance at how the market values them compared to their earnings,
Yeah.
but it's just one piece of the puzzle, really.
Yeah.
You got to weigh that against, their growth potential, how profitable they are, their overall financial health, the whole picture.
Hmm.
Only then can you decide if that valuation makes sense.
Right, right. And the analysis, it says this IPO is priced fairly, but I don't know, something still bugs me. That lack of, going after mergers and acquisitions aggressively makes me think, are they being too careful? Are they happy with slow, steady growth? Or are they missing a chance to, really dominate the industry?
I see your point. Playing it safe, sometimes that limits what a company can achieve.
Uh,
But then again, it could mean they're focused on sustainable growth, not taking unnecessary risks. It's a tough balance.
for sure. Okay, so let's talk potential risks. One thing that really stood out to me is how much Hexaware depends on a few, really big clients. The analysis said 62% of their revenue comes from companies making over $5 billion a year. Imagine most of your income from just a handful of customers. If one of them leaves, you're in trouble.
Big time. If even one of those big fish decides to go with someone else, or even just cuts back their spending, it could really hurt Hexaware's bottom line, makes them pretty vulnerable.
And remember how we talked about them maybe missing out on that whole digital transformation boom after COVID? What if they're just not quick enough to adapt to? How fast things change in IT. Tech moves fast. If you snooze, you lose.
It's like, yeah, trying to jump on a train that's already going full speed. It's constantly changing. Companies that can't keep up, they fade away. We need to see Hexaware. Are they investing in the right tech? Are they building the skills they need to compete? That's what matters.
Right. And then there's the leadership team, too. We talked about how their M&A strategy is kind of, unclear. Can we trust them to, have the vision, the experience to lead this company to growth? I mean, a company's success, a lot of times it comes down to who's at the helm.
Their track record, right?
Mhm.
And their ability to see what's coming in the industry and react to it, that's crucial. Investors got to feel confident that the leadership has a plan, that they can navigate those challenges, grab those opportunities. That's a big part of, deciding if an investment is worthwhile.
Okay, so we've talked about the downsides, but what about the potential upside? If you take a chance on this IPO, is there something good waiting for you?
Well, despite those challenges, Hexaware does have some things going for it. The market they're in, it's big, and it's growing. Globally, spending on IT services, it's expected to keep rising. That means, they have a chance to grab a bigger piece of that pie.
That's true. And they've shown they can, consistently deliver to all sorts of different clients. Plus, their focus on AI, that could actually give them an edge as AI, becomes more and more part of how businesses work. I mean, think about how AI is already changing things from healthcare to finance. It's a big deal.
Huge. AI, it has the power to totally change how businesses operate. And companies that really know AI, they could be in a great position for the future. The key is, can Hexaware use their AI knowledge to come up with innovative solutions, things their clients actually need as things change? That's what will make them stand out.
Right, right. And we can't forget about that employee retention rate, right? It's impressive. In an industry where it's so hard to find good people and everyone's fighting over talent, keeping skilled employees is like a superpower. It tells you the company culture is probably pretty good, which can lead to like better productivity, better service, and ultimately that helps the bottom line.
Absolutely. Employees happy, that's often a good sign that a company's doing well. Shows they're creating a place where people want to work, want to contribute. Long term, that's a big advantage.
Okay, so we've got this mix of like potential risks, potential rewards. Let's zoom out for a sec, look at the bigger picture. This whole IPO thing, it makes you think about, all the different ways companies can try to succeed in tech, this world that's always changing.
This is that classic story, right? The tortoise and the hare. Different approaches to the same race.
Exactly. You've got companies like Persistent and CoffWorge. They're out there, buying up smaller companies, expanding like crazy. Speed, risk-taking, that's their game. They want explosive growth.
Like the hare. Yeah. Sprinting ahead, big moves, always looking for those quick wins.
But then you've got Hexaware, and they're more measured. Organic growth, efficiency, that's their focus. They're the tortoise, slow and steady, building a solid base for the long run.
Lower risk, for sure. But it might mean they miss out on some opportunities or, they fall behind in this fast-paced market.
So which way is better? Is there a right way to win in this race?
There's no one answer, really. It depends, what industry are you in, what are your strengths and weaknesses, what's happening in the economy overall. It's about finding the right strategy for the right situation.
And what's interesting is both ways can work, right? You see companies doing great through those rapid acquisitions, and then others who grow steadily and sustainably by being more careful, focusing on what they already have. Lots of paths to the finish line.
Totally. There's no magic formula in business. What matters is having a clear vision, making your strategy work, and, being able to adapt as the world changes.
It's about balance, right? Taking smart risks, but also making steady progress.
Exactly. Growth has to be strategic. Just going out and buying companies without a plan, that can lead to problems like trying to make all those pieces fit together, financial strain. But if you're too afraid of risk, you might lose ground to everyone else who's moving faster.
So how does all this relate back to, Hexaware and this IPO?
Well, their cautious approach, it might make sense where they are now. They're already, a solid player in IT services with a good track record.
Like they've built that solid base, and now they're just, making it even stronger, expanding in a strategic way.
Focusing on efficiency, organic growth, that could be a good way to, really solidify their position, create a platform for growth at last. It's about making sure their core business is strong before they, try any big jumps.
But even with a strong foundation, they can't afford to get too comfortable, right? The IT industry, it doesn't wait for anyone. New technologies pop up all the time, and if you don't adapt, you get left behind.
You got it.
Yeah.
You got to stay ahead of the curve, invest in those new technologies, and be ready to, change their strategy as the market changes.
Yeah.
Standing still, that's not an option in this game.
So like Hexaware's strategy, it could go a few different ways, right?
Yeah, it's like they're at a crossroads, kind of. Multiple paths they could take.
Exactly. They could just stick with this, playing it safe approach. Focus on organic growth, maybe a few small acquisitions, nothing too crazy.
Yeah, keep doing what they're doing, basically.
Yeah.
Build on their strengths, stability over trying to expand super fast.
But then there's also that chance that maybe they switch gears, get more aggressive with the whole M&A thing, target bigger companies, to get new capabilities, new markets, that kind of thing.
Yeah, no, that would be a real change in strategy. Faster growth, for sure, but also maybe more risk, right?
It's kind of fun to think about all these different scenarios, how they could all play out.
Like watching a game, right? All those possibilities, all those different outcomes.
Okay, so as we wrap up this deep dive into the Hexaware IPO, let's leave you with one last thing to think about.
I like it.
In this crazy world of technology, things changing all the time, what does it really take for a company to not just, survive, but to actually thrive?
To really make it, yeah.
Is it about being the fastest, the biggest, the one taking all the risks?
Good question.
Right.
Or is there another way, a different path where it's more about being flexible, being innovative, really understanding what customers need as those needs change?
Keep those questions in mind as you continue exploring this stuff and coming to your own conclusions.
This deep dive is just the beginning, right?
It is. Use what we talked about as a starting point. Do your own research, due diligence, all that.
Look into their financials, read what
Yeah.
the analysts are saying, and try to figure out, what is the management team, what's their vision.
Yeah. Yeah. And most importantly, I think about how, this specific case with Hexaware, how it connects to like the bigger things happening in tech, right?
Because if you understand those big trends, how companies are adapting to them, that's how you make smart investment decisions.
That's it. Thanks for joining us on this journey into the world of Hexaware and this whole, fascinating world of IT services.
Hope you learned some stuff and that it made you, a little more curious to keep learning.
Because in tech, you're never really done learning, right? It just keeps changing.
That's the truth.
So keep exploring, keep asking questions, keep, searching for that knowledge.
Couldn't have said it better myself.
Until next time, happy investing, everyone.